One Sunday morning at Singapore Mall in Mumbai, something unusual happened. Customers noticed shirts with a price tag of 30,000 rupees, pair of trousers for 20,000 rupees, a leather wallet for 15,000 rupees, and a jacket for mind-blowing 50,000 rupees. One curious customer went to a sales staff and found that she was showing a man 24 carat 7 grams gold chain for rupees 300. When he looked inside the counter, he saw a real diamond ring for 200 rupees. Shocked at this, he asked the sales staff, how could a gold chain sell for 300 rupees and a normal shirt sell for 30,000 rupees? This is ridiculous. The sales staff said, last night a group of mischievous teenagers broke into the shop and changed the price tag on everything. She said, since morning everyone is confused. People are acting like they have lost their sense of value. They are willing to pay lots of money for cheap things of little value and almost nothing for things of great value. It's like they don't know what is really valuable and what's not. She said, I hope we get the price tags back right soon, as I really feel sorry seeing people pay way too much for things of little value. This incident at Singapore Mall in Mumbai may sound like a dream and would never happen in reality. But this happens every day in our stock market. A group of mischievous people slid into the market every day and changed the price tags. They mark up the value of things that are actually cheap and of low quality and put a huge discount on things that are really valuable. And sadly, many people fall into the trap before someone corrects the price tags.
I'm Dr. Krish. Welcome to our channel krisdom-investor. Here you get timely, quality and unbiased opinion on the stocks and investment opportunities.
Penny stocks. Anything or any stocks which are under single digit could be termed penny stocks. One needs to understand why it's a penny stock. The reasons can be attributed to poor financial, dubious management and promoters, bad business environment and so on. Penny stocks often suffer from low liquidity. In good times, though, it's easy to catch hold of them. In tougher times, the volume completely dries up and there are no takers for your stock. In this video, we will see 5 penny stocks under Rs 5. They are having quarterly revenue more than equity capital. They met the criteria of Krisdom AVA metrics more than 60%, having active management, improved performance, debt settlements on cards. I will also provide you top 2 picks among these 5 stocks and also let you know how to allocate funds for investment. There is an important alert. If you plan to invest in these stocks, then only invest after make up your mind that you don't bother even if you lose the money partially or fully. Video is for educational purposes and never invest in stock markets by taking loans, especially in the penny stocks. I have posted these 5 stocks in my members only area. Members only post is as shown here. Use the link given in the description to join as a channel member. Let's move to stock number 1. The company name is ALPS Industries. At the time of recording the video, it is trading at Rs 1.95. ALPS Industries Limited began manufacturing home furnishing items in the domestic market and subsequently commenced exports. Presently, the company exports to various countries like the USA, Canada, European Union, South Africa and Hong Kong. The company has also added a range of fashion accessory products like shawls, stoles, mufflers, wraps, etc. to its product portfolio. In the domestic market, these products are marketed under their own brand Lee Pashmina. They have also introduced a range of window coverings, garden umbrellas and wooden floorings to its range of interior decorative products. These products are marketed in the Indian market under their own brand name of Vista. Engaged in the business of technical textiles man-made, extensive track record in textiles business with established market presence and distribution network. ALPS CEO Sandeep Agarwal has drawn a salary of 23.5 crores per annum and stood as one of the top CEOs in the industry in the past. Permanent employees on the roll as on March 2021 are 1200 plus. It's not a small company, isn't it? In the past, it has over 4,000 employees and it started ramping up its operation from this financial year. Expect existing employees to grow in the future. Hence, it has the potential to grow big from here. Let's understand why it became a penny stock. Lack of policy support to the textile sector, especially to the technical textiles in the past. High dumping of low-cost Chinese home textiles and polyester goods. The main factor in share price decline over the 10 years is re-rating. It has a market cap of Rs 7.7 crores. Return over 1 year is 60%. Price movement and sales margins over a decade are shown here for your ready reference. It seems stock has bottomed out well and is ready for an up move. All the financial parameters are summarized here for your ready reference. Please pause and examine. So far it is a loss-making company and having a global presence. The price tag is pretty less. Company's debt settlement on cards. Growth in net profit with increasing profit margins. Increasing revenue every quarter for the past 2 quarters. Growth in the last 10 years is shown here. In the last 3 years, EBIT and PAT are positive. Quarter-on-quarter results are promising. Investors' returns are provided for your ready reference. Please pause and examine. Price is below 50 and 200 moving averages. Cash from operations is increasing year on year. Year on year growth in the year ended March 2021 is 387.02% versus minus 120.26% in March 2020. Growth in operating profit with an increase in operating margins. Shareholding pattern indicated promoters are holding 27%. Non-institutions are holding 72.9%, out of which retailers are holding 38.32%. If you look at the shareholding pattern, a decade back, promoters are holding the same 27%. But during that time, FIAs were holding 9.2%, insurance companies at 5.19%. In March 2017, promoters' pledge was 71.66%, and in June 2017, it was reduced to 38.6%. In June 2021, promoters' pledge further reduced to 37%, and their shareholding remains constant over a decade. Hence, sometimes promoters' shareholding may be less than 50%, but that doesn't mean that management commitment towards the company is bad. While assessing the promoter's interest commitment, one should look for whether the promoter's shareholding remains constant over a decade or there is an increased shareholding. Don't forget to give a thumbs up to the video. Once it reaches 1000 likes, I will release the next video. Let's move to stock number 2. The company name is Asiya Infosoft. At the time of recording the video, it is trading at Rs 4.2. Asiya Infotech is engaged in the business of providing information technology services. Engaged in the business of information technology services, permanent employees on the roll are 34. Let's understand why it became a penny stock. Unreliable management in the past. Stock manipulation allegations in the year 2015. Now a lot of restructuring has happened in the management, increasing its client base over last 2 years. COVID digital push is a boon for this company. Its market cap is at 5.2 crores. Return over 1 year is at minus 10%. Price movement and sales margins over a decade are shown here for your ready reference. It seems stock has bottomed out well and is ready for an up move. All the financial parameters are summarized here for your ready reference. Please pause and examine. The price tag is pretty less. Company with low debt, stock is trading at 0.11 times its book value. Debtor days have improved from 181.84 days to 91.85 days. Growth in the last 10 years is shown here. In the last 1 year, we are witnessing a huge top line growth. Quarter-on-quarter results are poor. Investors' returns are provided for your ready reference. Please pause and examine. Stock is trading below 50 and 200 moving averages. Net sales grown at 69% CAGR. Company's net sales has increased for 4 consecutive half-yearly periods. Promoter holding is low. Let's move to stock number 3. The company name is Madhav Infra Projects. At the time of recording the video, it is trading at Rs 4.48. Madhav Infra Projects is engaged in the business of infrastructure development and solar power generation. Engaged in the business of infrastructure development and renewable energy. Permanent employees on roll are 630 plus. Let's understand why it became a penny stock. Lack of policy support to the renewable energy sector in the past. Falling tariffs force Madhav Infra Projects to put its solar assets up for sale. High dumping of cheap solar panels from China. Orders flow is improving from the last financial year. Expect the momentum to continue. Its Bhopal solar project was considered under India Smart Cities Award 2020 by the Ministry of Housing and Urban Affairs in June 2021. Its market cap is at Rs 116 crores. Return over 1 year is at 76%. Price movement and sales margin over a decade are shown here for your ready reference. It seems the price has bottomed out well and is ready for an up move. All the financial parameters are summarized here for your ready reference. Please pause and examine. Company has reduced debt. Stock is trading at 0.89 times its book value. Growth in operating profit with increase in operating margins year on year. Growth in the last 10 years is shown here. Top line and bottom line are improving. Quarter on quarter results are promising with decreased interest payments and improved operating profits. Investors' returns are provided for your ready reference. Stock is trading below 50 and 200 moving averages. Sales trend is very positive. Net sales at Rs 208.73 crores has grown at 218.57% year on year. Promoter shareholding is at 72%. Promoters holding trend over a decade is shown here. Please pause and examine. Let's move to stock number 4. The company name is Chartered Logistics Limited. At the time of recording this video, it is trading at rupees 4.75. Chartered Logistics Limited is a logistics company offering world-class services like road transport services, special warehousing services, cost and freight services. The company is planning to expand their network to various parts of India as well as expand their business in parcel booking as well as door-to-door selling. Engaged in the business of logistics and transportation, permanent employees on roll are 84 and most of its employees are on contract. It has clients like GAIL, SAIL, GHCL, Reliance. Let's understand why it became a penny stock. It never shown significant growth in bottom line even though it has considerable top line numbers in the past. It's a victim of re-rating. Experienced management, now exports push and recovery of local consumption may help it to grow big. It has a market cap of 51.3 crores. Return over 1 year is at 58%. Price movement and sales margins over a decade are shown here for your ready reference. It seems stock has bottomed out well and is ready for an up move. All the financial parameters are summarized here for your ready reference. Please pause and examine. So far, it is a loss-making company and having a global presence. The price tag is pretty less. Company's debt settlements on cards. Company with zero promoter pledge. It's a turnaround from loss to profit quarter-on-quarter basis. Growth in the last 10 years is shown here. Quarter-on-quarter results are promising with positive operating margins. Investors' returns are provided for your ready reference. Please pause and examine. Stock is trading above 50-day moving average and below 200 moving average. Promoters are holding 52.69%. FIIs are holding 4.43% and non-institutions including retailers holding at 42.88%. Let's move to stock number 5. The company name is Eastern Silks. At the time of recording the video, it is trading at rupees 3.95. Eastern Silk Industries Limited is engaged in the manufacturing of silk yarn, fabrics, home furnishings, fashion fabrics, handloom fabrics, laces, and belts. The company's research facility has developed technology for fast color printing on fabrics. Their products are exported to Japan, Canada, US, and UK. The company plans to undertake various initiatives in order to increase their business, such as develop products with innovative designs and patterns, upgrading machinery, and focusing on R&D activities for adding value to their product range. In order to cater to the high-end users of silk products, the company is embarking on an expansion plan for producing silk velvets, including jacquard velvets, and this change in the product mix is likely to place the company's products in a different league. Engaged in the business of silk yarns and products, it has permanent employees on roll at 612. Let's understand why it became a penny stock. It's due to the lack of policy support to the silk manufacturers in the past, high dumping of low-cost Chinese artificial silk goods. It has experienced management. Now, company is embarking on an expansion plan for producing innovative silk products. Expect growth in top line in the coming quarters. Its market cap is at rupees 31 crores. Return over 1 year is at 182%. Price movement and sales margins over a decade are shown here for your ready reference. It seems stock has bottomed out well and is ready for an up move. All the financial parameters are summarized here for your ready reference. Please pause and examine. So far, it is a loss-making company and having solid exports capability. The price tag is pretty less. Debt settlement on cards. Growth in operating profit with increase in operating margins year-on-year basis. Turnaround company, loss to profit quarter-on-quarter basis. Growth in the last 10 years is shown here. Quarter-on-quarter results are promising. Investors' returns are provided for your ready reference. Please pause and examine. Stock is trading below 50-day moving average and below 200 moving average. Profit after tax PAT trend is very positive. PAT at rupees 1.53 crores has grown at 149.84% year-on-year. Promoters are holding 51.28%. This graph shows the returns over 1 year for all these 5 stocks with reference to BSE Sensex. It can be depicted that Eastern Silks delivered the highest returns at 196% and Asiya Infotech at -48%. Members only post is as shown here. Now this video is made public. ALPS Industries and Chartered Logistics are my favorite scripts. How to allocate capital? At the present valuations, most of these stocks look like junk. Based on the Krisdom AVA metrics, we expect at least 2 to 3 stocks to revive in the coming quarters and deliver multibagger returns. Estimated CAGR is not available. My opinion, distribute rupees 1 lakh investment for 3 years horizon uniformly, 20k in each stock. There is no stop loss because it is a high risky bet. As I said, these are the stocks under rupees 5. Expect 10x returns from at least 2 stocks. Don't forget to give a thumbs up to the video. Once it reaches 1000 likes, I will release the next video. Thanks for watching. Happy investing.